Now let's dive right into our first chapter on the sell side. Sell-side investment banking, origination in primary markets. Let's take a moment to glance at a focused version of our organizational diagram we showed earlier to regain our bearings. Sell-side investment banking refers to one specific group within the investment bank called origination. Now, origination is divided into two groups: debt capital markets, DCM, and equity capital markets, ECM. These teams are responsible for bringing new issue debt and equity securities to market, respectively. And going forward, I'm going to refer to these two teams by their acronyms, DCM and ECM. DCM and ECM, as debt and equity product specialists, respectively, have three main roles. Firstly, by bridging the gap of complementary needs between issuers that need to raise capital and institutional investors with excess capital, the origination team act as middlemen. This entire process of helping a corporation bring securities to market is called underwriting. And although the process is more nuanced, for the purposes of this course, we will refer to the concept of underwriting as the service of helping corporate clients issue securities generally. In addition, you can see here visually that the work of the IBD team feeds the work of the origination team. The team members in the IBD unit are actively speaking with corporate clients to serve as financial advisors, as well as win mandates like financing activities. In other words, the IBD team maintains and manages the overall relationship with clients, and the origination teams are the ones that get the work done when clients decide whether they need debt or equity financing solutions. As a result, IBD and origination act individually and together as financial intermediaries to effectively bridge the gap between two parties with complementary needs. So to summarize what we have learned in simple terms, the origination team is active in primary markets, which is the part of capital markets where new securities are issued. In primary markets, the origination team underwrites debt and equity. Through their work, origination bridges the connection between two parties with complementary needs. Now there comes a natural question. What specifically does it mean when we say DCM underwrites debt and ECM underwrites equity? The DCM team helps bring new bonds to market, while ECM helps bring shares to market. Most frequently, DCM helps issue new bonds from investment grade to high yield as well as government. They issue both short and long-dated bonds, as well as support commercial paper programs. ECM, on the other hand, helps issue common shares as well as preferred shares, as well as a host of other types of equity products. There is a wide range of debt and equity products that the respective origination teams will underwrite that goes well beyond bonds and shares. However, for the purposes of our learning, we are going to say that the DCM team originates new issue bonds and that ECM originates new issue stock. If you're interested in learning more about debt and equity products, I invite you to explore our other CMSA courses after you've finished your learning here. Now that we have a firm grasp of the function of an origination team, let's put our knowledge together and walk through a full circle transaction that takes us through the entire origination process. First, there will be an external client that wants to raise capital. This corporation will reach out to an investment bank and typically make their first point of contact the managing director that leads the industry group that the corporation operates in. For example, if the corporation, like in this example, is a major telecom company, the CFO, Chief Financial Officer, or Treasurer will reach out to the Managing Director of Telecom, Media, and Technology, often just called TMT for short. The IBD unit's Managing Director and his or her team will listen to their client's needs and objectives, then put together a recommendation on what they believe is most optimal. After presenting the client's team with analysis, the IBD team will reach out to their peers in origination. Depending on whether the recommendation is debt or equity, the IBD team will engage with DCM or ECM respectively. Once the IBD team's managing director passes the proverbial torch to his or her colleagues in origination, the transaction has officially stepped into the hands of the product group. The product experts will then take the client through every minute detail in the securities issuance process until the client's securities can be sold into the primary market. Last but not least, sales and trading. This team within the investment bank will support the new issue securities originated by trading them in secondary markets. It is important to note, however, that origination and sales and trading do not share inside or non-public information. For example, if the origination team is working on a deal to bring new bonds to market, their sales and trading buddies on the floor below are not allowed to know about it until the rest of the world does. This coins the quote, Great Wall reference. With all that said, what role can you expect to play in this process as an origination team member? Well, the answer is, it depends. The role that you play in a new issue transaction will be directly related to the position you hold in your group. A career path in an origination team has a fairly straightforward path in the sense that most banks will have approximately 5 to 6 stages of varying seniority for a junior to aspire to. The more senior your role, the less you will be, quote, doing, and the more you will be overseeing. In practical terms, this means that as you progress through more senior roles, you will shift from spending most of your time analyzing data in Excel and presenting it in PowerPoint to perhaps managing and overseeing this process to eventually hosting calls with clients and attending the meetings in person as the DCM representative. Let's take a look at what the workday routine looks like for an analyst or associate, keeping in mind that the bulk of the technical and fundamental skills you will need to be prepared to confidently manage client relationships at the most senior level is developed in these pivotal years as an analyst and/or associate. Here we go, bright and early. As an analyst or associate, the pace of your day will be largely driven by how many deals your team is leading. This is often called deal flow. The morning is usually the same routine. When you have a deal day, things may move a bit quicker, but up until about 9 to 9:30 a.m., your daily routine will go something like this. First, you begin by listening in on the sales, trading, and research team's morning call. While you may not be directly market-facing like sales and trading, it is important for you to have a pulse on markets, because the clients that your team services will ask for market commentary and your perspectives on market-moving events. So after the call, you continue to catch up on overnight news and any headlines that may impact markets. Now on to where the day takes a turn. If your team is leading deals, expect to be very busy. As an analyst or associate, you will be expected to support your team by preparing ad hoc indicative pricing sheets, putting together term sheets for distribution, as well as putting together deal summary documents for the end client. All of these activities will require you to be incredibly detail-oriented, as well as quick, precise, and accurate with numbers. You will demonstrate this analytical prowess to the nth degree using tools such as Bloomberg, Excel, and PowerPoint. Now, if your team is not leading deals, or if there just are not many or any live deals being priced in the market, then you will have a quote quiet day, which may consist of updating market slides, responding to requests from industry group peers, as well as creating case studies based on recent bond offerings for clients.